Good morning, distinguished guests, ladies and gentlemen. It is my great honor to meet all of you here today to discuss the latest hot issues in the shipping industry in China. I am the moderator for this session, named as China Global Economy Shipping Navigation Beyond the Coronavirus. My name is Lianjun, and I am a senior partner and the head of shipping team at Reed Smith's Hong Kong office. May I extend my warmest welcome to all of you and my panelist, Mr. Xu Hui, the representative for Captain Xie, chairman of the board of China Merchants Energy Shipping Company Limited, Mr. Hing Chao, executive chairman of Kwong Maritime Transport Holding Limited, and Mr. Weidong, deputy general manager of China Shipbuilding Company Hong Kong, and Mr. James Tong, managing director, head of global shipping and logistics in Asia, Pacific, and Japan, head of Diversified Industry China of Citibank, and Mr. Benjamin Wong, head of transport industry of InvestHK of the government of the Hong Kong Special Administrative Region. Our distinguished panelists will share with you their insights and experience on the shipping industry from their own perspective. I trust our discussion will be of much interest to the stakeholders in the shipping industry as we hear from the ship owners, the shipyard, the bank, and the Hong Kong government. Now, Mr. Xu, perhaps we could first start with Mr. Xu. Can you please give us a very brief background and introduction to China Merchants Energy Transportation Company Limited? Mr. Xu, please.
Yes, moderator. China Merchants Energy Shipping Company is called CMES for short. Is a Hong Kong-based world-class ship owners and operator providing integrated shipping service, listing in Shanghai Stock Exchange. CMES provides a full range of transportation service by running a large diversified fleet including crude oil tanker, dry bulk carriers, ro-ros, and LNG ships. Among them, 226 vessels are owned by CMES with a total of 38.77 million deadweight. It's worth mentioning that CMES is the world's largest VSC owners with 51 VSCs worldwide trading currently and another 4 VSCs under construction. We also have our largest VLC fleet in the world with 29 VLCs in hand and 5 VLs under construction. In addition, CMES strategically invested 21 LNG carriers. All of those VLCs and LNG carriers are committed to long-term projects to generate stable returns by cooperating with our global partners. CMES is aiming to become one of the world's best integrated and competitive shipping enterprises and committed to creating values for strategic investment and all customers around the world. Thanks.
Thank you, Mr. Xu. As one of the largest shipping companies in China, what are your company's major plans for this year?
Obviously, under COVID-19 global epidemic now, what we cherish the most is to safeguard the safety of our employees, both shore-based and on board. Continuously deliver quality and reliable service to our customers and try best to increase revenue and reduce costs so as to improve values for our shareholders. Secondly, we are going on to conduct and complete the internal integration of dry bulk business which together almost rank top 10 in the world. This is not only for fleet merging business, but also integration of fleet managing and human resources. Thirdly, we will keep on exploring digital technology innovation and application in shipping. For example, to monitor and improve a performance of 4 intelligent ships. Lastly, we will continue to optimize our fleet portfolio. We expect another 5 VLCCs will join our fleet this year, and also we have 4 VLCCs in order now. Thank you.
Thank you, Mr. Xu. I think everyone knows it has been very difficult times for many ship owners after the outbreak of coronavirus. In your view, how does the outbreak of the virus generally affect the shipping business in China?
Last week, China released the dates for January and February that showed sharp drops in key indicators as a result of economic suspension of epidemic situation, such as fixed asset investment dropped by 24.5% year to year, and retail sales reduced by 20.5%. Inevitably, shipping business suffered a lot. Most seriously affected was in February. Shipping freight rate dropped and vessel idling time increased. Recently, China is successful to encourage enterprises to resume work, and the shipping demand is recovering. However, shipping business is international. The outbreak of COVID-19 spread globally, especially in Europe and North America, which means new challenges for shipping industry. For shipping companies, also are facing the difficulties in shifting crew and arranging safety inspection affected by traveling restrictions and quarantine requirements. We trust the effects are temporary rather than long period. However, different shipping sectors face different situations. Although container shipping and dry bulk market hit a lot, crude oil tank market is enjoying unpredictable booming since 2 weeks ago. This is another story. Thank you.
Thank you. What about the new buildings and investment? What do you think in the short term from your point of view?
It depends. Current new building order will be for delivery at least 1.5 years later, should not be affected by temporary economic contract. If ship owner accept some comments to compare current situation to 1929 economic crisis, then we'll be very cautious. While if considering a number of countries have announced massive stimulus measures, there could be a chance for all the new buildings maybe. However, I want to mention 2 points. One is we may need time to see whether or how global trading pattern and the supply chain could be changed afterward. 2, there has been limited change to new building pricing over the last 14 months. For our company, CMES, we have a clear strategic direction for business integration and fleet development, and will unwaveringly following the strategy to make sure the achievement of goals. For example, we have kept doing fleet renewal for last few years, and we will go on this year. In fact, of unpredictable changes in the global market, we will carefully analyze and keep pace with the times and fine-tune of our plans according to market conditions. Thank you.
Thank you, Mr. Xu. I think we are very interested in knowing from your views from the one of the largest state-owned shipping companies. Now, can we turn to another very long history, a very well-known shipping company in Hong Kong, Kwong Shipping. We are very pleased to have Mr. Hing Chao here. Hing, could you give us a short introduction to your company? You are very well known in Hong Kong, in the world. Can you, maybe someone not knowing your company well, can you do a brief introduction, please?
Thank you, Mr. Moderator. Kwong was founded by my grandfather in 1952. For the past nearly 70 years, we have been providing tonnage to global shipping, really across all sectors, from dry bulk carriers, oil, particularly crude oil, but also tankers, product tankers, as well as gas. At this moment in time, we are mainly focused on oil and in dry bulk carriers. We have 18 ships directly owned by Kwong, as well as 6 new buildings. Since 2 years ago, Kwong has started to diversify our business. So in addition to being a tonnage supplier, we have also started to provide integrated asset management services to our clients, which cover the range from new building supervision, technical management, operational and commercial management, which we see as very much a synergy with the traditional part of our business.
Thank you, Hing. I understand Kwong is currently building in multiple shipyards in China, and you are due to take delivery of 15 vessels this year. Therefore, I believe you have unique insight into how Chinese shipyards are coping with the current situation. Could you share with us, please?
Generally speaking, Mr. Bao, of course, is much better placed to answer this question, and he'll probably, no doubt, add to my comments. But from our own experience, general delay with state-owned shipyards in China tend to be between 4 to 8 weeks, with 6 weeks being about the mean. One of our early ships due for delivery, actually one of our own ships, which is a Kamsarmax due for delivery on the last day of March, that's to say 31st of March, that has been delayed exactly as I said for 6 weeks. So we are due to take delivery of that ship in mid-May, and that's relatively indicative of all the new building projects we have going on in China this year. As far as we know, because we are also due to take delivery of ships in 2021 and 2022, as far as we know, there are no delays for the ships from next year onwards.
Thank you, Hing. I also understand Kwong use predominantly Chinese seafarers, and most of your dry docking will be done in China. I wonder whether you can share with some insights and experience in dealing with the seafarers and the dry docking business in China.
Yes, absolutely. We use about 90 to 95% of our seafarers from mainland China. So obviously, with China being one of the first places in the world to be seriously affected by coronavirus, we were not and have not been able to change seafarers since January. But thankfully, we have been able to obtain exemption. And the indications are, as China is going back to business, and indeed shipyards are back to 85% plus of capacity, we're also expecting changing of crew to be possible across multiple ports in China in the near future. We're hoping in April. In terms of dry docking, we were supposed to have a ship for dry docking in January. That was obviously delayed, but we have been able to get it done already. So dry docking is actually possible already in China.
Thank you. And from another angle, I understand Kwong has a new office in China as one of the few private companies that had to deal with the situations in China. Can you share with us your experience?
Well, I have to say it has been an absolute boon to have an office in China. I think one of the difficulties that many international shipping companies are having at this moment is that China, of course, is a very important place for dry docking. However, it's very difficult for people anywhere to travel. Outside of Europe, outside of US, flying to China. So having our own team of superintendents in China enable us not only to attend to new building activities, but also to take care of dry docking. In fact, recently we have been asked by one of our partners, friends in Europe to assist them with dry docking in China because they're simply unable to send their superintendent over. So indeed for us, it's been very, very helpful to have our own team of people, to have a permanent office in China.
Thank you, Hing. I think unique insights are very helpful and giving some practical guidance to the ship owners. And I'm very pleased to hear the active delivery plan and also work you have done. I hope your company will be very well, and thank you for your insight.
Thank you.
Yeah. Now coming to shipbuilding, we have Mr. Bao, and last November, the two big shipbuilding companies were merged, and also your company is listed in Hong Kong. Mr. Bao, I wonder you can share with some insights what were the practical difficulties caused to the shipbuilding industry by the virus to the Chinese shipyards, and how are being resolved? Can you share with us?
Okay. It is really a sudden disaster happened to all the Chinese shipyards because shipbuilding industry is a labor-intensive industry. It needs a large quantity of labor force. So the virus, what we call COVID-19, the main problem it caused is our labor force cannot go back to work after Chinese New Year as normal because of the virus. But anyway, so far, up to now, I got information from my shipyard, homeland shipyard, that over 90% of labor forces come back to work, and this is one thing. And all the shipyards, they implement a very strict hygiene and hygiene rules system into the daily work, so to prevent the further spread of the virus when the people coming back to work. Meanwhile, they have all the shipyards. They take very good care of ship owner, supervisors, classification society surveyors, and service engineers for commissioning from various marine equipment suppliers working in the shipyard. So far everything is under control, and as Hing just mentioned, the delay of the ship, new building ship, I think it could be controlled in 1 or 2 months for the recent delivery of the ships. But for the ship delivered next year in 1 year or 2, that will be okay. Then there will be no delay. For the time being, the other hand, we have talked with ship owners very smoothly in negotiation arrangement for the new agreement for delivery of the ships. Most of the ship owners have cooperated with our shipyards very well. We all think that this virus is really a force majeure event. So this is a common point we reached with ship owners. So now I think it's fine for all the shipyards in China. Yeah.
Thank you, Ms. Val. I think it's very good to know 90% of the employees have come back to work, and also shipyards have taken the steps to control the hygiene and situations. And also very pleased to note the shipyard and owners are working together and to deal with the situation. Now, let's coming back to another current operation issues, IMO 2020. Since January 1st, 2020, what about the scrubbers? And do you expect more ships will be installed, the scrubbers? And what's your view?
Okay, for this very hot topic, we talked all over the year last year, huh?
Yes.
But come into 2020, I think the booming of the scrubber installation or retrofit a new building will be over very soon. Okay. It's because the following 4 points. One is the price gap between low and high sulfur fuel oil is now very narrow. From 350, around $350 at the beginning of this year, to now it's only 80 US$. So for $80, many ship owners will check very carefully their investment return. This is one point. Another is for installation, especially the retrofit of the scrubber in shipyards. The schedule delayed a lot. As I mentioned in the last session, not only the schedule, but the cost for the ship owner is very high, much higher than they expected. So this is the second issue. For the third is the virus caused delay further of the installation schedule. You can see now in our Chinese shipyard. I heard from Weidong, from Costco shipyard, from major shipyard, even China Merchant shipyard in Circle. Now, at least 60 days late for late than scheduled delivery. So the ship owner will consider, the later for delivery, the less invested return for ship owner. So this is the third point. Last one is for scrubber is not the only solution for 2020 regulation, IMO regulation. You can see now I have a chart here. Showing the red one is LNG carrier, LNG fuel new building, and the black one is scrubber. The LNG dual fuel is now increasing very steadily. Up to today, about 400 vessels, new building vessels, adopt dual
LNG.
Fuel. The scrubber will, you can see it dropped very sharply from the beginning of this year. The number of scrubber installation.
Okay, so, it's very useful. And now coming back to your business, your Hong Kong company, one of the major part is leasing, right? And the Hong Kong just Gazette, its new tax bill in order to attract leasing companies to operate in Hong Kong. Do you think if the draft come into the law, and this will attract Chinese leasing companies to operate in Hong Kong?
Yeah, it's sure. You know, at present, we for leasing company, normally we establish for each project a SPV company.
Yeah.
SPV company, you can see we register SPV company normally in BVI, others, tax haven countries.
Yes.
If we want to avoid the tax in Hong Kong before, at present, we can only use the Chapter 23B.
Yeah.
According to this chapter, if the ship a ship leasing company incorporated in Hong Kong, and it has a very strict rules, requirements for such company to get rid of the tax.
Yeah.
With a new proposal proposed by the Hong Kong government, I think it put Hong Kong in the same level with other area, tax haven area of the world. It will benefit our leasing company much more. So we will not consider more about setting up our company overseas. We can take our all these companies back to Hong Kong, and in the future also we will show more appearance in Hong Kong with our SPV companies under this arrangement of taxation. It's a very good news for us, I think.
Okay, thank you very much, Ms. Bao, and thank you for your insights to the shipyards, repair, scrappers, and leasing companies. Very useful. And nowadays, very important, now coming to the banks. Everyone is talking with the bank, even law firms. I think we are very pleased to have James here tell us some insight of the banking ship financing. How do you deal with the situation? So, hi James, in your views, what do you think the general impacts caused by the outbreak of coronavirus to the ship financing business? Can you share with us?
Sure. I'm more than happy to share what I see. I think for this particular COVID-19 situation has actually thrown off lots of people's. But having said that, I think it really depends on which sectors are we looking at.
Yeah.
Like Mr. Shea earlier mentioned that the tankers markets are doing very well, and container shipping company actually is doing quite well too. LNG is doing all right. The only sector probably is affecting is the cruise industry.
Oh yeah.
Really similar to aviation itself. I think that is the part that, from the short-term perspective, company like cruise company will need liquidity in order to deal with the situation in the short run. But in the long run, probably there will be quite a lot of regulation going. People might fundamentally change the way that they go cruise, and this is how analysts and banks might analyze this industry very differently. Having said that, I think in Asia there are not too many cruise company, and most of them are in the US, and they heavily rely on the capital markets. For me, I think it's not the short-term impact, but in fact it's the long-term impact because of the current situation, how it would disrupt the supply chain, and also because of the situation, there might be acceleration of the reallocation of different manufacturers in different countries. I think what benefit shipping industry will still be benefiting from that so long there will be trade amongst the countries. I think this is something that what I see. And also this is just an extension of the financial crisis 10 years ago. It already dried up quite a lot of capitals from some of them already. So I think it imposed a lot of discipline into the shipping industry. I always said that if the money will go to the right project, I think that actually helps shipping company, because in the past when money is too available, it encouraged a lot of speculators in there that ultimately would affect the ship owners who is legitimately moving goods. Unless we don't believe there is a trade, I think that shipping will continue to be very important, particularly for COVID-19. The only thing, as I mentioned, affected will be passenger related.
Thank you, thank you. Today I just heard from some clients. In particular, India has announced kind of measures. People are worrying about the marketing, or the vessels have to wait. Are there any measures, temporary measures for the bank to consider to offer to the lenders if they have difficulties? I just wonder whether your industry have some thought on this.
At the end of the day, credit is credit, right? So bank protect their depositors too. So it will not affect the way that we analyze the clients itself. But I could be very comfortable to say that a lot of shipping clients nowadays have already gone through the crisis 10 years ago when the drop of the liquidity. I think discipline has been instilled. And also the change of technology has discouraged a lot of money going to crazy investment, because you don't know when you invest in technology, whether 10 years later, it's going to be there. So the IMO 2020, the Poseidon Principle, these are actually good for shipping. For us, we are a global bank. Shipping is only one part of our global portfolio. So we, in fact, have been helping a lot of clients coming up with liquidity. We shorten our credit approval processes to help facilitate this the need. From my perspective, luckily enough, our clients for shipping clients, specifically for shipping clients, those are the names that they have got a lot of support from the relationship bank. They have got liquidities on their balance sheets. So that will actually allowing them to have buffers comparing to probably some of the names that over leverage and probably have been heavily reliant on they're not diversified enough. I think those shipping company has already reduced quite a bit over the last 10 years. So for that, I think we'll continue to help our clients when there's a need. But so far, I think Asian shipping clients have been very disciplined. So they are in a very good position.
Thank you very much. Mr. Paul just mentioned the leasing new law on the tax law in Hong Kong will attract more leasing companies to come to Hong Kong. As a banker, what do you suggest the Hong Kong government, what more they should do? Of course, we are here, Benjamin, but from the banker's point of view, what do you think the Hong Kong government should do in order to attract more companies operating in Hong Kong?
I think it makes sense to have leasing company to do the heavy lifting, so the shipping company can concentrate on what they do best. But having said that, we need to be disciplined how to allow leasing company to be investing in their ships too. So I think that while we're encouraging them to come to Hong Kong, another way that we can help them is to come up with similar to like export credit agencies around the globe. They might have direct investment, or they might have an insurance program. So what the Hong Kong government could provide an insurance program, probably for leasing company when they order certain green ships for the clients on a long-term basis, or maybe on technology. This is something that can make use of the Hong Kong's AA plus rating, because that would really help lower another finance cost for the leasing company to do the right thing. I think this is something that we could also combine that with the green initiative that the Hong Kong has been very active in green investment, green bond. I think all of these could be a platform to link them together rather than looking at that on isolated cases. Another part is equity. We'll be able to help shipping leasing company to list their create a listing in Hong Kong. I think this is the part that Hong Kong is a big financial market. It has a lot of investors, various investors in here, and also it is a offshore renminbi business hub. I think this is something that could create a lot of investment interest for renminbi and also for a right type of ships. And Hong Kong could be a leader in that part to work closer with shipyards to develop the technology. I think in the long run, that would actually help the shipping industry. I think this is the part that what we can do, something more innovative. While we have got this bit by bit already, how we could use this opportunity to bring it forward, because we know that 2020 is already here, and then it will be zero carbon that we're talking about. It's just a matter of time. So I think we need to be a little bit more gutsy to do something innovative in order to be the leader, to leverage our already established, well-established financial market in Hong Kong.
I think it's very good, James. A very good idea. I have to declare I am also a member of the Hong Kong Maritime Port Board. I think your suggestion is really good. We have to be innovative and we have to consider what are our advantages. Thank you very much. Thank you for your insight on the ship financing, leasing, and the suggestions. Now coming back to I think it's good to have Benjamin here. And Benjamin is in charge of the Hong Kong Invest. And due to your work, a lot of companies now thinking or continue investing in Hong Kong. And Benjamin, can you give us very brief what you think Hong Kong government can do more, in particular this kind of situation, or Great Bay areas, or still One Belt, One Road aspect? Can you give us a very brief?
Yes, thank you, Mr. Lee. Now, I think this is a COVID-19 panel, so maybe I'll start with something I've done just now this afternoon. We've got a request from Spain and Italy to source for machineries. One is for the ventilator. It is under very big shortage over there in both Spain and Italy right now, and also mask manufacturing machines. So actually the whole afternoon was spent trying to help them to find suppliers of that. And so actually it comes in very handy when we are right next to mainland China, and that there are quite a number of suppliers on that. And actually one of the suppliers that we have helped to get connected is a partner of China Merchant. So all the best to this connection, and hopefully they will be able to get those machineries that they need. Now, going back to this panel, I think the very tough situation for Hong Kong, actually, it is not only started with COVID-19. Actually, last year we started with the trade war, and then we got into the social unrest, and now COVID-19. So the government has been, of course, planning and also doing different things to deal with it. Our forecast for this fiscal year, the GDP probably will be in the range of negative 1.5% to 0.5%. Now, that's why we have this expansionary budget announced. We will be spending additional 20% comparing to last year, so that we will be able to support the economies more. And this is before COVID-19. Now with the COVID-19, we have this 30 billion epidemic fund set up, which will be provided to the business to make sure that the business they will be able to sustain through the very tough outbreak. Now, what does it include? It includes, for example, profit tax break for businesses up to $20,000, and also concessory low interest loan under the loan guarantee scheme, up to $2 million. And then we also have this $66 billion allocated for the green bond issuance. Now, the reason, there are many different items. The reason I picked these 3 items is because now the profit tax reduction is aiming at keeping the money in the company's pocket. Whereas low interest loan, that is mainly so that the businesses, when they need additional financial resources, they will be able to get it cheaper. And then the $66 billion green bond issuance allocation is for the next 5 years, so that when there are need for longer term, and also especially for green initiatives and technology, then we will be able to get them. So this is for business, and for individuals, we are also putting aside $120 billion, including cash handouts to individuals, $10,000 each, and then also salary tax reduction. So again, the aim is that businesses, we want to support them, and then they will be able to keep the jobs, being able to stimulate the economy. And then, of course, individuals will be able to contribute to the economy. Now, Mr. Lee, you mentioned about the Greater Bay Area and also, for example, Belt and Road. I think now start with the Hong Kong side, actually specifically for Maritime. Mr. Bao mentioned earlier, and also James mentioned earlier about the ship leasing scheme. And besides of that, we also have this tax reduction on the marine insurance. The marine insurance tax, profit tax will be reduced to 8.25%. And of course, the aiming is that so that we will be able to get more suppliers of that here in Hong Kong. And then arbitration side, we have the Maritime Arbitration Group getting by itself independently. That will be using the terms and procedures will be based upon the LMAA. And then, of course, we have the interim measure implemented between the mainland China and Hong Kong. So this actually is giving very strong support to the maritime industry, and especially the maritime law and arbitration community. Now, for the Greater Bay Area, actually, Mr. Chao mentioned about the setup of their Shenzhen office, which is working out very well for them. And I think Greater Bay Area is, that's the purpose, that 11 cities, we group together, we leverage on each other's strengths and advantages. So we've got talents over there, we've got technology, and we've got fantastic financial platform and international exposure over here in Hong Kong. So it's all a matter of grouping together and make it stronger. Now for the Belt and Road, now with this COVID-19, actually, I think it will be changing quite a bit of the geopolitics landscape, and also the mindset of the people about different kind of cooperations. Of course, Hong Kong being part of China, we are very keen to support and to contribute more to the Belt and Road from our perspective. At the same time, actually, I think the changes actually we will be observing on that. But I think Hong Kong were a very small city, open economy. So I think with shipping, which is connecting different parts of the world and economy, so I think it is a natural fit. So with that, I think the COVID-19 is a medical event. And I think before that, the global economy was going relatively well. So what we are hoping is that after the outbreak is over, we will be able to pick up from where we left off, where the economic fundamentals are actually strong, so that we will be able to grow again. So the government is actually trying to make sure that we will be there. Thank you.
Thank you, Benjamin. Our session's time is going to run out. And thank you all, the panelists. And I believe we have briefly discussed how the Chinese economy and the main stakeholders are navigating out of the current situation, and what the opportunities are waiting us. I hope also our audience who are watching and listen to us will find this session helpful and inspiring. Thank you all. Thank you very much. Thank you.
Thank you.
Thank you.
Thank you.